UBS.
Absolutely, a positive view. Finally, I think at least something positive more that we could expect as UBS is highlighting. There's an upgrade that has come in for TCS, upgraded to a buy from a previous neutral rating. Target price also is what they've increased. 4,700 is the new target price they've given versus the old one of 4,050. Now, the factors that they are highlighting for TCS is that one, they expect it to lead its peers in terms of revenue growth. They're expecting to 100 to 150 basis point increase, along with improvement in terms of margins for FY25. They believe growth and margins will be the best in the sector for TCS and better than its peers when you look at it. Factors that will play out in terms of large deals, the ramp up of large deals that are there for the company. Some of them like BSNL is one of them which they mentioned as well. Revival in the BFSI segment is one thing that will work out for them, as well as revival in cloud migration projects are some of the key drivers that UBS has highlighted for TCS. Also, they're expecting a fall in terms of the attrition rate. That will be aiding the gross margins going forward, maybe with a slight bit of a lag, but that's something that could start working out well for TCS going forward. And that is why an upgrade coming in from UBS for TCS as of now, quite positive on that front.
See, I look at IT company very simply. That can one say that there is light at the end of the tunnel after what's happened to the AI business? Of course, there is light at the end of the tunnel. I think it is very evident that the AI threat is real. AI threat is here to stay, but that's not going to be shuttered down for Indian IT services. So anybody who's assuming that, I think that assumption now needs to be challenged. So that narrative that AI is going to be disruptive and everything's going to shut down for Indian IT companies, I think that entire fear is getting gradually diluted. So I think it's a matter of time that the opinion will start changing, that look, these companies can survive and they can do complementary work with the AI subset requirement. Within that, TCS right up there in terms of execution, ability to migrate, ability to scale up, and ability to perhaps demonstrate. So it will continue to command a premium. The problem is that TCS is not trading at a discount to its long-term averages. It may be at the lower end of the long-term averages. It may be nearing there, but I don't think it is there yet, which will give you a real comfort zone. So if you're buying a stock like TCS, either you need to be prepared for maybe a quarter more of sidewise returns, no return, or a 10% volatility, something which cannot be ruled out. The narrative has not changed, but the narrative I think would be strikingly different than what it is as growth normalizes and base effect starts kicking in the second half of this calendar year. So IT, I think, is no longer a sell. It is certainly not a big buy in my book, but it is certainly not an avoid, which is that if you're holding on to it, you hold on to it. Typically, when you look at a sector, the return will always be with a high growth company and with a stable company. That's how sector revival happens. When banks came in, it was SBI which came back. And then Bank of Maharashtra which came back from the PSU Bank. Why? Because Bank of Maharashtra and South Indian Bank gave you the best growth and SBI gave you a comfort. That is how IT will revive. So TCS gives you this comfort growth. But it is still trading above the long-term averages. If a sector which is going through a disruptive change, the valuations have to come below the long-term average before you can thumb the table and you can say buy. So I'm going to raise my hand and say, okay, I'll time that thumping the table now. Earlier I was not even raising my hand.